China's NEV sales penetration rate rose to 11.4% in March. NIO's share in China's NEV market reached 3.4%. Notwithstanding, the Chinese premium EV market is entering a no apple to fall situation. NIO has entered into many new partnerships for 2021. Today, we'll tell you about NIO new partnership, stock price analysis. Number 6. New major partnership with Sinopec. NIO is now building EV infrastructure with Sinopec. This collaboration could strengthen the company's advantages on infrastructure, cost, and services, attracting more customers. Amidst the coronavirus pandemic last year, the global economy was severely compromised. However, China's economic recovery is moving now at a lightning speed that overshadows other nations. Passenger vehicles and EV sales locally carried the leading positions in March 2021, presenting surges of 80% and 352% respectively. In the same month, monthly EV sales first reached 11.3% of total car deliveries in the country. The rocketing EV sales mirror the overall strong consumption recovery. NIO broke its monthly record, delivering 7,257 vehicles in March. Meanwhile, NIO's EV market share was down to 3.4%, mainly due to the booming sales of Wuling Mini, a product of SAIC Motors, Liuzhou Wuling Motors, and General Motors' joint venture. Leaving aside market dynamics and competition, NIO's new form of cooperation with Sinopec is also worth mentioning. Even though some of the EV makers' previous strategic collaborations are not important, this new project definitely stands out. On April 15th, the founder William Li and other major management figures at NIO and Sinopec announced that they have released the second-generation swap station in a Sinopec gas station in Beijing. Based on their agreement, NIO will deploy many of its planned swap stations at Sinopec sites. We think this initiative will create synergy effects for NIO in two ways. Sitting. Most of NIO's current swap stations are geographically located in non-core urban areas. Due to the difficulty in site selection, probably it's hard for NIO to find open-air places to build stations in the city's center. By using Sinopec sites, the construction of swap stations can solve the problem. Brand marketing. Another significant benefit of building a swap station in Sinopec's gas station is to achieve accurate marketing. Hypothetically, every driver will be exposed to NIO's swap station when they are filling up their cars at some Sinopec's gas stations. This is highly harmonic with NIO's brand strategy, whereby promotion is one of the important purposes of developing a swap station network. With the economy bouncing back, China's automotive industry is recovering first, along with increased demand for both combustion engines and EV motors. The competitive landscape is becoming more intensified. NIO, in turn, is actively reinforcing its business through infrastructure-related collaborations. Number 5. NIO stock updates. Chinese luxury electric vehicle maker NIO published a mixed set of Q4 2020 results on Monday. While the company's loss per American depositary share was wider than expected at about negative 14 cents, revenues came in slightly ahead of expectations, growing 46.7% sequentially to about $1.02 billion, driven by stronger deliveries of the ES8, ES6, and EC6 vehicles. NIO stock was down by about 5% in pre-market trading on Tuesday, likely due to the company's lighter than expected guidance. NIO expects to deliver between 20,000 and 20,500 vehicles in Q1 2021, marking an increase of about 17% at the midpoint of Q4 2020. Considering that the company has already delivered 7,225 vehicles in January, sales over February and March are likely to be slightly weaker compared to January. Although this is possibly due to businesses remaining shut through the Lunar New Year festival period that took place in early February, it should be noted that competition in the electric SUV space in China is also mounting. Tesla, Nasdaq, TSLA recently started deliveries of a locally made version of its Model Y compact SUV. The vehicle is relatively competitively priced and could put pressure on luxury EV players such as NIO. Separately, the company has indicated that a shortage in semiconductors and batteries is likely to cut its production over Q2 2021 to 7,500 vehicles per month, down from 10,000. Number 4, the big picture. The main attraction is the potential market. The electrification of transportation seems to be on a path of no return. EV sales are expected to jump from 1.7 million in 2020 to 26 million 10 years from now, and then more than double from there to 54 million by 2040, according to industry research provider Bloomberg NEF. The firm believes that China alone, the world's largest automotive market, will account for about 13 million EV sales in 2030 and 18 million by 2040. That puts NIO in the right place at the right time. To that end, NIO and its partner, Jack Motors, just began construction of a new industrial park in collaboration with the city of Hefei, China, on April 29th. The park will include a new factory to support future production growth. Number 3, strong global vision. NIO has always had a strong global vision. We worked with our design team in Munich, Germany, and our Advanced Research and Innovation Center in Silicon Valley, California, for our EP9, one of the world's fastest electric vehicles. NIO has long aspired to become an even stronger worldwide brand for electric vehicles. Now that vision is coming into focus with our presence in Norway. It will mark NIO's first excursion into the highly competitive European market and a turning point for our global market strategy. NIO's deep roots in China are based on our global software R&D center based in Beijing, working alongside and in partnership with our Silicon Valley office, our global headquarters and R&D center for production models in Shanghai, our Chinese headquarters and advanced manufacturing center in Hefei, China. We established a strong European presence with our Global Design Center in Munich, Germany, our Advanced Engineering R&D Center in Oxford, England, and our racing team. NIO also internationally located its Global R&D Center for Advanced Technology in Silicon Valley's high-tech hub in San Jose, California. NIO's global vision is coming into even sharper focus with our presence in Norway. Number 2. Will the stock hit $80 in 2021? Analysts predicting for NIO stock. NIO has had a stellar year of trading, outperforming investor and analyst expectations. NIO stock has gained 839% over the past 12 months, cementing its name as one of 2020's best performing stocks. In addition, the Chinese EV manufacturer managed to deliver over 20,000 vehicles in the first quarter of 2021. With strong delivery and revenue growth, NIO has vanquished its domestic competition, Li Auto and XPeng. Furthermore, NIO plans to expand its production capacity with its key manufacturer to 240,000 units a year to meet a surging demand for NIO's vehicles. Firstly, the general consensus amongst analysts is bullish. Across the board of 18 Wall Street analysts, the average 12-month price target is currently $50.78 a share, upside of 42% from the current trading price. However, for price targets released in 2021 alone, the average sits at around $64.14 a share, 88% uptrend from 2020 analyst coverage. Here are a few 12-month price targets from institutions. Mizuho analyst Vijay Rankish boosts coverage to $65 a share and a buy rating. This suggests an upside of 82% from the current trading price. The analyst notes NIO is a leader and innovator in the premium automotive EV segment. Furthermore, Rinkesh noted to investors that NIO has the home court advantage in the booming Chinese EV market. Deutsche Bank analyst Edson Yu from Deutsche Bank reiterated the firm's target of $60 a share and a buy rating for NIO stock in 2021-22. HSBC analyst Yu Shending boosted their 12-month price target to $54 a share, representing a 58% upside from the current trading price. Number 1, NIO stock a buy? NIO stock is down by almost 25% over the last month, trading at levels of around $42 per share. The stock is also down by about 34% from its all-time highs. So what's driving the correction? Firstly, there has been a broader sell-off in high-growth stocks on account of rising interest rates. Secondly, competition in the luxury electric SUV space in China is increasing, with Tesla commencing deliveries of a locally made version of its Model Y. Separately, the global shortage of semiconductors has also hurt automotive companies, and investors are likely concerned that NIO could be impacted. That said, we think NIO stock looks like a relatively good value at the moment. Although the stock still trades at a seemingly steep 12 times projected 2021 revenues, NIO is growing very fast. Sales are projected to grow more than double this year and to grow by almost 65% in 2022 per consensus estimates. We think the company should continue to fare well despite growing competition. The EV market in China is massive, with sales in 2020 standing at about 1.3 million units, and sales are projected to grow by over 50% this year. NIO could have an edge in China, being a homegrown brand that offers unique innovations such as battery as a service. Let us know in the comment, according to you, what is the future of NIO stock? Please subscribe to the Stock Advisor. Thanks for watching.